Ang tagal mag-record. Okay, so once again, welcome to this discussion for inventories. We're now to discuss inventory systems. So for this discussion, our focus points to discuss or define inventory system, then discuss the two inventory systems. I know you know those inventory systems. We have the periodic and the perpetual. Then to solve sample problems. Actually, we're going to compare the two inventory systems in journal entries. We're going to journalize specific transactions in a sample problem. But nonetheless, so to start, so what is an inventory system? So to answer the question, what is an inventory system? Inventory system is an accounting system employed by a company showing the manner of accounting for transactions involving inventories. So meaning, inventory system, they are just manner of accounting the transactions that involves inventories. So all the purchases and sale transactions that relates to inventories. Usually, inventories, the transactions relating to inventories are just sale and purchase transaction. Sales related or purchase related transaction. So again, inventory system is the manner of accounting those sale and purchase transactions in relation to inventories. By the way, of all the asset that a company may own, only the inventories will use. They will generally use the account purchases. No other asset except from inventories. For example, we purchase land or building, we do not debit purchases. Rather, we use the specific account titles. But for inventories, it depends on the inventory system employed. We could use special journals or we could use the inventory account itself. But again, inventory is the only asset that may use the a purchase uh, journal, purchase account. Okay, so inventory system, it is the manner showing the accounting for the transactions involving inventories. Now, being a manner of accounting those transactions, inventory system may refer to the process of ordering, storing, using, and selling the company's inventories. So, how the company's purchase will refer to the order, then the storing and using the inventories on how the inventories are utilized for business, then how the inventories are being sold. Like how do the company account for the sale of those inventories? So based on inventory system, the common inventory system that we have is periodic and perpetual. So I know you are familiar with periodic and perpetual. You have uh, encountered this under your basic accounting, under your merchandising, and there's a difference between the application between periodic and perpetual. So to start with periodic, periodic system, it is a commonly used inventory system. Although both periodic and perpetual inventory system are applicable in practice, but it depends on the company's management on what to use in accounting for inventory transactions. So they could use periodic or they could use perpetual. It is a matter of disclosure on the part of the entity in the notes to financial statements. And with regards to periodic, aside from being the commonly used inventory system, we can say that an entity is using periodic inventory system if all sales related and transactions related, purchase related transactions are accounted for using special journals. Meron tayong makikita mga special journals. Example, we have the sales journal and the purchases journal. You could also have the yung purchase returns and discounts. Meron din yan. But yun nga, uh, which means that upon looking at the journal entry, you could already identify the transaction that had transpired, which means when it is a purchase, it is really debited to purchase account. Perpetual system is different from that aspect. Okay, because there's a different application under the perpetual inventory system. So that's it. For periodic system, we use special journal accounts. And also, with periodic system, uh, physical counting or physical count is required. What does it mean with physical count? It is mandatory counting of the inventories that will verify or reconcile the records with the physical count. It is checking if the records is accurate. Sometimes the company's records are some of those are being omitted. Transactions may be omitted or intentionally not recorded. But with physical count, there will be um, tawag nun, omissions will be detected or the accuracy of the records will be questioned if physical counting is done. Okay? Assuming all inventories are present during the count or all inventories that had been within the company's ownership, yun nga, it will be counted and it will be compared with the records of the entity. Okay? So between records and physical counting, medyo accurate, yung maging accurate si physical counting, assuming all the inventories counted are owned by the entity. Okay? So yan si periodic inventory system. Physical count is required with the use of special journals and commonly used inventory system siya. Okay? Then for perpetual inventory system, the perpetual inventory system uses the so-called stock card. The stock card is used to track the inflow and outflow of the inventories, both in terms of unit and in peso. Okay? Example of stock card, ganito. A stock card is free format. Wala yang sinasabing fixed format. It it depends on the entity on how they format their stock card. When I was in my um, OJT, I was assigned with supply management. Okay? Yun, ako yung nagbabantay dun sa pinaka-shelves, supply shelves. Ang daming mga supplies dun. And I prepared a stock card. I prepare stock card for every type of inventory, item by item basis. All that is all that is being delivered to the entity will be recorded as an inflow of the inventory. May pipirma dyan, someone will sign, okay, will approve the number of units and the cost of those inventories. Then, kapag merong kumuha, if inventories are put out from the shelves, meron ding magsasign dyan to signify the flow of the inventory, in and out of the inventory. So, yan yung usage ng stock card. With the use of stock card, ayan, physical counting will no longer be required for perpetual inventory system. Although physical counting will be highly encouraged, is highly encouraged for entities using perpetual inventory system. But because again, if we're going to strictly follow the stock card, we can already know how much is the balance of the inventories, the cost of the inventories, or how many units of inventories remaining in those shelves or in the warehouse, for example. In contrast with periodic inventory system, perpetual inventory system, all purchase related transactions are charged to an inventory account. We do not use special journals for purchase related transactions. However, the sales related transactions will still be accounted for using special journals. Okay? With the use of special journals. Later, we're going to compare the summary journal entries yung periodic and perpetual inventory system. Okay? Periodic do not use stock card. Wala yung stock card. And in the entry, you can determine if it is perpetual if the debit for purchases is already inventories. For example, merchandise inventories. So therefore, in order for you to determine kung if the entry is related to a purchase, you will look into the description ng journal entry. Under periodic kasi, if assuming the entry is correctly entered, yung makikita mo doon is a debit to purchase. That means that the transaction is a purchase. But under perpetual, when you enter the transaction into a journal entry, debit sa merchandise inventories, you will not know if it is a purchase. What you will do, look for the description. Kahit short description lang, okay lang yan. Okay? Assuming again, everything else is correct. So this is a summary comparison with the journal entries under periodic and perpetual inventory system. So to start with the purchase of merchandise inventories, as you can see under periodic inventory system, we debit purchases, while under perpetual, we debit merchandise inventories. Yun yung sinasabi ko under periodic. Na kumbaga, the transactions are recorded as is. So, nadi-describe ang transaction by the journal entry itself. So, a debit to purchases will give you hint that that the entry is referring to a purchase transaction. While under perpetual, we debited it to merchandise inventories. Next, to record the freight in or the shipping in cost, under periodic, we debit it to freight in account. While in perpetual, we debit it to merchandise inventories. Reason for periodic inventory is that, yun nga, as is ulit. The journal entry describes the transaction. So, debited to freight in. The reason for perpetual, why it is debited to merchandise inventories, kasi yung perspective niya, sabihin niya, anyway, at the end of the day, that cost will form part of the inventories. So, why not debit to merchandise inventories? Yun yung perspective ni perpetual. Parang, ano, meron merong shortcut sa process. Hindi na dumadaan sa mga special journals. Diretso na agad sa inventory account. Then to record the return of merchandise purchased, nakalimutan ko lagyan ng purchased. Yan. Under periodic inventory system, it is debited to, it is credited to purchase return. The same debits, pero yung kay periodic system, purchase return and credit. While under perpetual inventory system, we credit merchandise inventories. So purchase-related transactions are charged against the inventory account. So since we are focused on merchandising concerned business or merchandising concern, we're going to refer to merchandise inventories account. Yan. But starting with sale transactions or sale-related transactions, medyo nakakaparehas ng konti si periodic and perpetual. For the sale of merchandise, periodic and perpetual will have an entry debit to cash if it is cash basis and or credit accounts receivable if it is credit basis. Then credit sales revenue. Okay, credit sales revenue. However, in addition to perpetual inventory system, we have additional entry to signify the cost of goods sold or the cost of inventories sold by debiting cost of goods sold and crediting merchandise inventories. Okay? That means that it shows that the inventories are already in effect being expensed on our part. Yan yung isang evidence in the journal entries or in journalizing that assets are being expensed. Diba? Kumbaga dun sa adjusting entries nyo, nagiging expense ang prepaid, ang isang prepayment kung na naglalapse ng time or na nagagasto na ang savings. Prepayments are savings. For inventories naman, nagiging expense yung inventory which is the asset when sold. Kaya nga pag pumapasok siya sa cost of goods sold account. Now, paano nagiging expense ang inventory kapag naibebenta? When it undergo sale transaction. Under perpetual, may kaakibat na journal entry, debit to cost of goods sold and credit merchandise inventories. Although yung in effect na expense siya, hindi siya nire-record as an expense account. It is a special journal, special account na cost of goods sold dun sa income statement. Okay, that's why yesterday I asked you if cost of goods sold is an expense. Okay? So sa nagsagot ng correct, correct talaga 'yun. Okay, pero hindi siya yung expense na gaya ng dun sa PAS 1 na classify na selling expense, administrative, hindi. Okay? Iba siya. Ibang type of expense effect. By the way, can you still follow? Kindly raise hand lang po. So I hope nare-refresh sa periodic and perpetual inventory system. This is just a somewhat recall on your basic accounting. Next, to record sales returns, periodic inventory system and perpetual inventory system both debit sales return and credit cash if the initial sale in which the return was related was referring to a cash basis sale, or credit to accounts receivable if referring to a credit basis sale. But in addition to under perpetual inventory system, we debit merchandise inventories and credit cost of goods sold. The debit to merchandise inventory signify that you have received the inventories, including its cost. Then the credit to cost of goods sold is to signify deducting the amount of cost of goods sold due to an uh, in effect concealed sales revenue. If there are sales return kasi, it is as if kinakancel ang sale. So it is a concealed sale. So the related cost of sale entry kinakancel din. So how do we cancel or nullify the effect of sale? In addition, we debit merchandise inventories and decrease the cost of goods sold by crediting cost of goods sold. Being an expense account, cost of goods sold is a normal balance of debit. Kaya nga contra account siya ng sale to compute the gross profit. Okay? Then to record the adjustments for ending inventories, only periodic will have journal entry. This is in connection with the reconciliation of the records with the physical count. To record the adjustment for ending inventories, we debit merchandise inventories and credit income and expense summary, or sometimes income summary lang. Okay? Then under perpetual, we don't have journal entry anymore. Reason, because the cost of ending inventories is being determined already by the use of the stock card. So at the end of the day, stock card na lang ang gagamitin to determine the cost of remaining inventories. Yeah. So let us apply everything else in a problem solving. So yan. INTACC1 company reported a beginning balance of inventories 255,000 and had the following transactions related to inventories during the current year 2019. January 1, purchased 1 million worth of inventories from suppliers, half of which were paid in cash and the other half on credit basis. The company paid 10,000 for freight cost. Okay? So, bumili ng inventory si INTACC1 company from suppliers. 500,000 daw kasi kalahati, binayaran through cash, so cash basis. Then, yung kalahating 500,000, inutang. So, credit basis. Then, nakagasto na ng 10,000 for freight cost. Since it is related to purchase, we account this freight as freight in. So, to journalize January 1, under periodic inventory system, we debit purchases, credit cash, and credit accounts payable. Purchases is debited to 1 million. However, under perpetual inventory system, it is debited to merchandise inventories. We still have the same credits, however. Okay, the same credits. For the freight in of 10,000, periodic inventory system debit freight in for the 10,000, but perpetual inventory system debit merchandise inventories. Again, the reason this freight in will later on become part of the inventory account. Okay? Then February 1, a 200,000 worth of inventories were returned to suppliers in good condition. It was charged against the company's credit account, which means the transaction is relating to a purchase transaction. So we're referring to inventories returned to suppliers. It was charged against the company's credit account. What does it mean? Diyan magbe-base yung magiging debit natin. Okay? Debit natin. Because instead of returning cash, what was done is to decrease the accounts payable of INTACC1 company. Because credit account is referring to the yung credit basis kanina. Half which is paid, purchased through credit basis. So it is credited earlier to accounts payable. So therefore, for February 1, the 200,000 will be decreased. Will be a decrease against the accounts payable. So to journalize February 1, we debit accounts payable, the same under periodic and perpetual. But under periodic, our credit is purchase returns, 200,000. Then under perpetual inventory system, our credit is merchandise inventories. Why merchandise inventories? Because our initial entry for the purchase was related to a debit to merchandise inventories. So, nagiging consistent si perpetual system by the use of the merchandise inventory account. Okay? So, by that entries, you can already see the flow of the inventory account. So, parang nagre-refer na rin dun sa stock card. So, debits on the inventory, merchandise inventory accounts will signify the inflow of inventories. While the credit here and February 1, the credit to merchandise inventories will signify the outflow because we have returned. So that's an outflow of inventories. Next, May 1. Sold to customers inventories. Inventories daw are costing 300,000 at saka yung pagkabenta is good for 500,000 cash. Therefore, we have a cash basis sale. So under periodic and perpetual system, we both debit cash and credit sales revenue for 500,000. 500,000 is the selling price or the sales price. It is a cash basis sale kaya nga debited sa cash. But under perpetual system, additional entry is to signify the cost of goods sold. So debit cost of goods sold and credit merchandise inventories. The credit to merchandise inventory signifies the outflow of the inventory because of the sale. Okay? Can you still follow, guys? Na-refresh sa merchandising? Kindly raise hand. Sabihan lang ako if I have error on those entries. Baka namamali lang. Okay, moving on. So May 31, received inventories from customers in good condition amounting to 60,000. So sales return from customers amounting to 60,000. The related cost is 40,000. Cash paid were returned that day. So it is only proper that the transaction is relating to return of cash payment because the initial sale that we have was related to a cash basis sale. So to record the sales return on May 31, ayan, under periodic system and perpetual system, we debit sales returns. Okay, sales returns, then credit cash for the selling price of the merchandise returned. But in addition to perpetual system, we recognize the receipt of the merchandise, then simultaneously decrease the amount of cost of goods sold, signifying that there is an as if cancel, hindi talaga as if, canceled sales revenue talaga because of the sales return. So debit merchandise inventories, then credit cost of goods sold, thereby decreasing the cost of goods sold. Mhm. So yan. Madali lang, no? Parang walang thrill yung discussion natin. Joke lang. Importante to kasi may activity kayo ng merchandising. Anyway, so sana tayo nun? August 1, sold to customers inventories costing 550,000 for 750,000 credit. So credit basis naman. Okay? Instead of cash, it's on a credit basis. So to journalize, saan na yun? Yan. Both periodic and perpetual will have a debit to accounts receivable and credit sales revenue. Because it is credit sale, we debit accounts receivable instead of cash. Okay, our amount would be the selling price. Then in addition to perpetual inventory system, we have a debit to cost of goods sold and credit merchandise inventories. Meaning every time we have a sale, whether it is a cash sale or a credit basis sale or a credit sale, we always uh, I mean we always signify the cost of goods sold by preparing a journal entry for cost of goods sold under perpetual inventory system. Okay? Under perpetual inventory system. Makikita naman yan sa record, sa journal entries. Kasi after the sales journal entry, you will see there's a cost of goods sold na entry. Then, September 1, received inventories from customers in good condition amounting to 45,000. So, there is a sales return again from customers, 45,000 with a cost of 30,000. This time, the returned inventories were credited. I mean, we're relating to the credit basis sale in August 1 because in the last statement it is provided as the credit memos were issued that day. Credit memos are means that uh, a credit memo is actually a letter being sent to the customers, letter or a notice that their accounts had been decreased because of the return. So, nag-i-issue yung company ng tinatawag na credit memos. Thereby, sasabihin doon sa memo that your account had been decreased because of the return or return accepted. So, anong gagawin ni company? Babawasan ng accounts receivable niya kay customer. Yung gagawin naman ni customer, babawasan ng kanyang accounts payable kay seller. Yun lang ibig sabihin ng credit memo. Okay? So, how do we journalize September 1? So, September 1, we debit sales return and credit accounts receivable because the sales return was related to the credit basis sale. And in addition to perpetual inventory system, we debit merchandise inventories and decrease the cost of goods sold by crediting cost of goods sold, 30,000. Sales return, dapat naka-selling price. Decrease in the cost of goods sold will be referring to the cost of goods returned. Then last, for December 31, sabi dito, based on records and physical count, the inventories remained unsold for the year amounted to 285,000. So sige nga, para meron kayong participation, kindly verify si 285,000. Kindly show me ng competition ng 285 based on the amounts here in the transactions. Okay. Ilagay nyo sa chat box kung paano nakuha si 285. Okay, malay nyo lang. Nagjo-joke lang ako dito. Hindi ko alam. Hindi ko alam. Malay nyo lang. It is for you to verify. Yan yung pinaka first, para sa akin, that's the first, when it comes to competition, that's the first rule in problem solving. We have to verify, lalo na yung mga pre-computed amounts. Yan. 285 is a pre-computed amount. Hindi ko pinakita how is 285 computed. So, kaya tinatanong ko kayo, how is 285,000 computed? Okay? So, meron tayong beginning inventories, purchases, sales, returns, and yan nga. So, paano? Sige, I will wait. Marami pa tayong oras actually. Okay, ayun, meron na nakakuha ng tamang sagot, ng tamang solution. So how do we compute again 285,000? We start with the beginning inventories. Then, we add purchases. Our gross purchases is amounting to 1,010,000, including the net, the freight in. Then bawas ng purchase return, bawas ng cost of goods sold na dyan sa May 1. Yung cost yung ibabawas, hindi yung selling price. So therefore, between 300,000 and 500,000, yung ibabawas yung 300,000. Then receive inventories from customers. So sales return, what you will add is the cost. So plus 40,000. Then August 1, sold to customers inventory. Okay, minus ng cost of goods sold. So 550,000. Then for the returns on September 1, we add 30,000 referring sa cost. Yon. Or you can have it, yung difference kasi ng 255,000 and 285,000 is 30,000. So net sum of January 1 amounts to September 1 amounts should be 30,000. So 1 million minus 200,000 minus 300,000 plus 40,000 minus 550,000 and plus 30,000. That should be net positive of 30,000. So 255,000 plus 30,000 net increase or net change in the amounts. So that would be 285,000. Okay? So to journalize our December 31 adjustment, we simply debit merchandise inventories and credit income summary, or we can have it income and expense summary. Okay, but that is under periodic inventory system. Under perpetual inventory system, again, we don't have a journal entry. Simple reason, we already have the aid of that stock card. So through the stock card, we can already verify the value of the inventories remaining, both in units and in peso. So that concludes our discussion with inventory systems.